Good afternoon, class. Welcome to second class of economy. Today we'll be audio okay. Today we'll be discussing monetary policy in India. Today feeling little under the weather, so please adjust if any issues. I will try my best. So since last class, everybody understood how money is supplied in an economy. Any issues regarding that? Any doubts? So last class we had a general discussion about how central banks in any country supply money or suck out liquidity from the market as per the government's needs or need of the economy. Today we will be discussing mainly the monetary policy with regards to India, what RBI does, how it controls the money supply and other policies. So first, these are the concepts which we will be discussing. Okay, any idea what is CRR, SLR, repo, reverse repo, bank rate, SDF, so that I can get an idea about the depth of the class? What is CRR? Yes, it is the full form. Why CLR and SLR are there in the market? Yes, last class we discussed there are some reserve ratios which any central banks have, so that any bank cannot create unlimited amount of money there to control the inflation. If there is unlimited amount of money created in a system, then there will be inflation and collapse of the system. So in place we have CRR and SLRs, the amount of money which the banks cannot lend. They have to always keep that money in their depot, in their vaults with RBI or in their own vaults. Understood? It would be better if you people shift here, or you have a camera here too. Now, everybody heard the term repo and reverse repo. MPC committees declare repo rates and reverse repo rate every 2 months. They meet every 2 months and then they declare. In future slides, we'll discuss this. Then there is bank rate, at the rate which RBI lends money to commercial banks. It was an old concept, mainly rudimentary now. Then there is standing deposit facility, marginal standing facility. These are all measures by which RBI sucks out money or injects money into the system. Okay, and demand and time liabilities is the, in short, we can say it's the savings account money or the FD or RD money that we have with banks or post office. Okay, that they can be demanded at any time. They can be demanded after a certain period of time. Okay. Now, what is CRR? CRR, the full form is cash reserve ratio. It is one of the reserve ratios in India that RBI declares. Currently, it is 4%. Okay, 4%. 6th December 2024, it was reduced from 4.5% to 4%. So basically, if we recall our last class, if there is a reduction in the reserve ratio, what will happen? No, it's not repo. Repo is another concept. It is CRR, cash reserve ratio. I will discuss these details in a short time, just to get an idea, just to revise in last class. Last class we have discussed that if any central bank reduces the reserve ratio, then what happens to the money supply? Yes, it increases. The money supply increases so that people have more money to spend. So to boost consumption. Understood? So it is a, you can say current affairs. It was 6 December 2024, 6 months back. It was decreased from 4.5 to 4%. Basically to inject an estimate 1.16 lakh crore money in Indian economy, because there was after COVID, there was a restriction on they increased the repo rates to increase the CRR rates. Every rates were increased so that there is basically to suck out money to limit the supply of money in the system so that there is no inflation, because during COVID there was a chances of inflation, stagnation, and much more. So RBI sucked out money from the system. There is scarcity of money in the system, so people had less money to spend, and there in that way they controlled the inflation indirectly. Now, due to low inflation, there are risks of stagnation, risk of stalling growth in our system. So, RBI decreased the credit reserve ratio by 50 basis points so that ultimately money increases in the system. Okay, it was basically what RBI intended to do by decreasing the reserve ratio. Now, what is cash reserve ratio and how it is calculated? It is another concept. Before that, we have net NDTL, net demand and time liabilities. It's the amount of money that a bank has in its system, in savings account, in current account, in FD, RD, etc. So how much money a bank has to keep as CRR? It will be 4% of its NDTL. Let's say a bank has total 100 rupee worth of deposits with it. So the bank will have to keep 4 rupees with RBI in pure cash form. It is the total amount of FD, RD, savings account money that a bank has. Let's say he has 50, you have 20, you have 20, I have 10. Okay, total 100 rupee in the bank. He might have 10 rupee in savings, 40 in FD, and we all are having savings. So total bank has 100 rupee in its system. So as RBI mandates CRR, it has to keep 4 rupee as pure cash bundles with RBI. It cannot buy gold, cannot buy shares, cannot buy securities worth of that 4 rupees. So basically, RBI is keeping that 4 rupee inactive in the system so that bank can only lend up to maximum 96 except the CRR. Okay. Now after there is SLR also, so there will be SLR will be debited. Then there are other securities that bank also have to keep, and finally might be the bank is left with only 80 rupees to lend. Okay, understood? So basic features of the CRR is it has to be cash, no gold, no shares, no certificates, pure cash with RBI. And it is applicable to all banks. Any bank that is licensed with RBI, scheduled commercial bank or cooperative bank, anything, foreign banks, local banks, everything, they have to keep this CRR in pure cash form. Okay, now next we have SLR. Now SLR is now CLR won't be enough to control the amount of money in the system. So there is another reserve ratio which RBI has, that is called statutory liquidity ratio. Okay, statutory liquidity ratio. Statutory means it is mandated by law. Liquidity is the amount of liquidity, that is economic concept, amount of money, and ratio is the percentage. Okay, it is 18% as of today. RBI has a rule that maximum SLR can be declared up to 40%. Okay, SLR can't be declared as 41. No, maximum up to 40%. You have to remember that. Now, these what is the difference between CRR and SLR? CRR had to be pure cash, no gold, no securities. Okay. Now, in case of SLR, RBI is permitted. The bank can buy gold, the bank can buy securities, not any securities, RBI approved securities. Basically, G-Secs and T-bills. If some private corporations have high credit rating, they can also be approved by RBI, but that is not necessary. Main, you have to remember that it has to be RBI approved. RBI approved securities, not any securities. Even I can issue security that after 2 years, I will give you 20% interest. That won't be approved by RBI. Okay, understood? Same, this is also applicable to all banks. So basically, these are reserve ratios that bank has to keep with the RBI. Any issues? Understood? Understood now what CRR and SLR is basically doing? It can also be cash. It depends on the bank. Okay. See, only gold, RBI approved securities, or cash. This decides these are the safest investments. Okay, understood. Now next we have repo rate. Any idea what is repo rate? Repurchase. Exactly, yes, repurchase. Next, there is another thing. Repurchase order. Okay. Basically, it is an agreement. Try to understand. Note बाद में भी कर सकते हो. Okay. It can be any bank. For simplicity of understanding, I am only using the example of commercial banks. Now, basically, it is a repurchase agreement between the RBI and any commercial bank. In this case, commercial bank sells government-backed securities to RBI. Okay, and after a specific period of time, mostly 7 days, for example, we say 7 days or 14 days, whatever may be in the agreement, the commercial bank buys back those G-Secs with an interest. Okay, the bank has to buy back. It is an agreement. The bank cannot deny after 7 days that I will not be requiring that securities. What is the objective? It will sell the government securities. It will get money. It will get currency. The bank will get 7 days. They will get some money to lend or pay their bills or anything like that. Okay. These are not loans. These are short-term agreements, and the bank has to buy back. Okay. There is no whatever difference in chase. Huh? Let's say there is a person A. Huh? He needs money. He doesn't have money right now, but he has some certificates which are worth some, say, let's say 100 rupee. Okay. but he doesn't have any cash. Okay, he has something which is worth 100 rupee. Now B is the money lender. He's a big money lender. Okay, now he has lots of rupee cash. Now let's say A needs 100 rupee, so he will sell this asset to B, and he will get A will get 100 rupee. Okay. Now in this agreement, RBI and bank have a special agreement that let's say after 7 days, the A has to buy. Now what? He has 100 rupee and he has the certificates. Okay. Now after 7 days, what happens? This certificate has to be bought back by A, let's say at 101 rupee. The same certificate after 7 days, he has to pay a little bit more. Okay. So there is a concept of some interest here. That interest rate is 6% as of now. Okay. Here the whole arrangement has to be completed after the repurchase of the certificates happens. Understood now? It is not any kind of loan. You have to sell certificates, you have to buy back them to get money. Certificate. He doesn't have 101 rupee, then such person will be declared bankrupt. The bank will be closed. Now, this doesn't happen. There is a lot of things by which a bank gets money. You have savings account, you have current account, people deposit money, the bank have money. So this is a policy rate. Okay, at very extreme cases when there is lack of money with the bank, happens sometimes. The bank doesn't have. Last class we have discussed that there is 500 rupees in the system. 500 rupee in the last example we have discussed 500 rupee in the system, but actual printed money was only 100 rupee. Okay, so sometimes there is crunch of money, so banks can for liquidity reasons banks can borrow money from RBI. It is not a loan. Borrow will be the wrong connotation to use, but there is some kind of agreement in which there is some interest component to it, because for some time the RBI will be parting with its money. Now how RBI gets the money? RBI has lots of money because of CRR, SLR, and also RBI is the lender. RBI also prints money, so RBI has no dearth of money. Okay. Now understand what is the whole repurchase order, repurchase agreement. Now, what will be the increase in amount after 7 days, 14 days, whatever? It will be decided on repo rate, which RBI declares. Currently, it is 6%. Maximum there is no limit, but it is 6%. 4 plus minus 2 is average. Acha. One issue we have discussed. Sorry. We had discussed that in SLR quota, banks have to maintain 18% of its NDTL as gold or cash or government securities. Got it? Now, while borrowing, while in repurchase order, we have to the bank have to sell government securities. Na, those government securities can't be from this SLR quota. It would be outside of the SLR quota, because if the banks are able to use SLR quota money, ultimately what they are doing, there will be no use of the reserve ratios we have discussed, because ultimately aim of reserve ratio was to stop that money from going into the system. Now, if banks are allowed to use SLR quota government securities to borrow money to push into the system, so that reserve ratio function wouldn't be successful. Understood? So while borrowing money, SLR quota government securities cannot be sold or bought back. Those government securities have to be kept dormant into the system. Next, reserve ratio. Any idea? Reverse repo. Class. Reverse repo. Any idea what can it be? Yes, exactly opposite. But no, RBI doesn't need money. RBI will not borrow. RBI will keep money with it. Let's say at sometimes keeping cash is cumbersome for any bank. Okay, keeping cash is also costly for a bank. Okay, so let's say HDFC Bank for next, because it's an accounting also, for next 1 month they need 100 crore, but in their system they have 200 crore. So instead of keeping this extra 100 crore idle within their system, if they can't find anybody to lend, they will keep it with RBI as and the rate they will get is reverse repo. Okay. RBI will give 3.5%. Just a minute, there is an issue with our system. Just hold on. Okay, sir. Understood reverse repo? Basically, you can imagine it is a reverse of what happened earlier. Okay. And can imagine RBI is taking loan. Can imagine kind of RBI is taking loan. It is not the case, but for imagination, for better understanding, you can think like RBI is taking loan. Not safeguarding, it's basically to reduce the liquidity. To reduce the amount of money supply in the system. Okay. Now next we have any issues with that? Now bank rate. Okay. It it was the policy rate in not recent, not currently, it is not the policy rate, but before Urjit Patel committee recommended the use of liquidity adjustment facility. Audio is okay, na? Audio? Okay. This rate was used by banks to borrow money from RBI. Understood? In last, we have seen that there is a concept of repo rate. Okay, before the concept of repo rate, there is the concept of bank rate. Bank rate. It is dormant. It is not used to borrow money now, but still there are some uses to it, which we will be discussing now. Okay, this was the old tool. Old tool of policy. Okay, it was basically started in after the balance of payment crisis. Everybody know what is balance of payment crisis? It was started in 1992-93 after 1991 balance of payment crisis. Class, anybody know? Balance of payment, BOP, balance of payment crisis. So this will be your assignment for today. What was balance of payment crisis? Some reasons why, and after it, what are the changes done by government to safeguard our economy? Understood? You all have to positively do it. Now, in repo, there is an exchange of government securities. In bank rate, there is no collateral, no exchange of securities. Purely bank gets money from the RBI as loan, pure loan. It is not any repurchase agreement, nothing, just pure loan from RBI. Okay. And this rate had a fortnightly lag to it. Okay, after every 15 days, the rates were revised. RBI had to declare, but it is not the case now. It is not used for lending activities now. It is mainly used to decide penalty rates. Let's say a bank has failed to do its duties properly. There are some lack of efficiency, lack of transparency in the banking system. Now RBI has to impose a penalty on that bank. So what will be the penalty? It cannot arbitrarily decide what is the penalty rate for any bank. So on the bank rate, penalty rates are decided. Penalty rates are basically approximately plus 2% of bank rate. Okay. For example, RBI and the commercial banks, and this is a market based rate. What is repo rate? Repo rate, there is a MPC committee, monetary policy committee, which decides the rates based on expert recommendations, economic activities, and all. And bank rate is purely a market activity. Amongst the bank, different commercial institutions, there is a market demand for money in the market. In money market chapter, we will understand there is a demand for money, and there, according to the demand, the rates fluctuate in the market, and on that fluctuating rates, bank rate is decided. Okay, now on that bank rate, for every 15 days, it has had to be revised, and on that rate, RBI used to lend money to commercial banks without any collateral, pure loans. Okay, but now this is rudimentary. Just you have to get the concept. So I am discussing this mainly now. During the market rates, bank rate is decided, and on that bank rate, let's say RBI decided there is a 2% penalty, and for example, on the market it is decided there is 6.37% bank rate. Maybe banks are lending among themselves. So if any RBI decides to impose any penalty, it will be 8.37%. It is say. For example, not it's 2% is not the fixed amount. It is for example, for sake of understanding, I am saying. If let's say the penalty rate is approximately plus 2%, so let's say RBI decides to there is some KYC records mismatch in any regional rural bank, then the RBI will impose a penalty that 8.37% of maybe NDTL or 1 month's income of revenue, anything RBI can do it. That is the penalty. Now next we have, these are different rates. You have to understand why they are used and in which cases they are to be implemented. Now next we have standing deposit facility. Now what is this? For any reason, maybe there is excess money in the system. Okay, so SLR is fixed at a percent. CRR is also fixed at a percent. What was the CRR? No, percentage. 4%. Now, in some cases, even these reserve ratios are not sufficient to maintain a healthy economy. So what will be the process through which RBI will suck out the extra money? So that is standing deposit facility. The rate is 5.75 as of today. And how will RBI or banks limit the amount of money? No, not taxes is a part of fiscal policy. RBI doesn't impose any taxes. RBI has monetary policy. It supplies money in the system. Okay, taxes cannot be part of it. Simply bank will buy government securities. And the rupee will be with RBI. So there is less money available in the system. Simple. Now what is this GSEC going to do? Understood? We have discussed in terms of liquidity crunch, banks can borrow money, but that money cannot be from SLR quota. Now bank will use the GSECs bought in the SDF quota. Okay. Eta बैंक हैज एक्स्ट्रा मनी, उसको इतनी जरूरत नहीं है, सिर्फ इतना ही जरूरत है, एक्स्ट्रा रुपी इसको देगा आरबीआई को, और आरबीआई इस this rupee worth of government securities bank will have. Bank will earn interest, income will increase, the money will be with RBI, there is no money in the system. So RBI controls inflation. Percentage change, that is expensive while borrowing from repo. Understood? And repo has a limit. There are some limits to repo. The bank cannot borrow unlimited amount of money using repo. The government securities cannot be from SLR quota. Understood? Here, bank will give out the money, na? No. In case of what? Reverse repo, the bank cannot borrow using SLR quota. Okay, so how will it borrow? It will borrow using SDF quota. I'm not saying this is the borrowing. It is the first phase of SDF. I'm saying what will happen after, let's say, it has G6 worth of 1,000 crores. Immediately there is a need for 90 crore rupee. So it will not sell the G6 in the market. There will be crash. The interest rates will be changed overnight. So to control that, instead of dumping those bonds in the market, banks can borrow from RBI using this quota G6. Understood now? Those SLR quota G6 are only for reserve. They are not used for anything. They cannot be used for lending or any activity. Understood now? Okay. Now demand and time liabilities, it's a very simple concept. Demand liability and time liability. Any idea? What can be the difference? Hmm? Class. What is demand liability? What is time liability? Decipher from the words, na? It's very simple. Demand liabilities can be demanded at any time. Savings account, current account, demand draft, letter of credit, anything that I can just enter the bank or any other institution and get my money right now, right then and there. Time liability is fixed deposit, RD, etc., which has some time component to it. Okay, let's say FD is 1 year. If you prematurely withdraw the amount, there is some penalty to it. So ultimately, banks don't have to pay the interest. So now, why I'm telling you this, there is a concept of NDTL, net demand and time liability. So remember, CRR, SLR of a bank are decided upon the amount of NDTL a bank has. Now, what is NDTL? NDTL is calculated demand liability plus time liability plus ODTL minus assets of the bank. Understood? Demand liability is this, time liability is this. Now, in demand and time liability, no interest is calculated. Only the principal amount which you have deposited, it is calculated. ODTLs, in ODTLs, we have the interest. Ultimately, we have to calculate the interest also, but it is calculated under different section. Okay. Or it also have interest and bills. bills, then there are some other pending payments, etc., which the bank will have to pay ultimately, but they are not the principal component of demand or time liability. Got it? Now what will negate? Negate the assets of the bank. The bank will receive some payment from another bank. There is some payments, UPI payments, RTGS payments. The banks have transaction among themselves now. So during the calculation of NDTL, the assets of that bank will be negated, because negated principal, then the interest due, bills due, then the bills it will get, the amount of money it is supposed to get, that is negated, and we have the NDTL. Okay. On that NDTL, we have 4% CRR, 18% SLR. Understood why NDTL is important? Now, MSF. What is it? Marginal standing facility. In SDF, we have discussed how excess money in the banks are put in RBI, and they buy G6. Now, MSF can be considered a reverse of that. Understood? Now, in this case, banks need money. There is in shortage of money. So, they will borrow money from RBI, but not at repo rate. Repo is 6%. Okay. Now, in repo, the G6 we discussed, the government securities cannot be from SLR quota. Now, bank is in need of so much money, they have exhausted that SLR quota. They have exhausted the extra SDF G6 or any G6 they have bought from investment purposes. Even now, they are needing money. Okay. Now, what is the remaining? They have SLR quota G6, government securities. Now, those SLR quota government securities are put as collateral, kind of mortgage, not mortgage, put as collateral, and RBI lends money to the banks. As collateral, it will be higher than repo rate, because it shows that bank is not managing money efficiently. After exhausting all its resources, still it is needing money from SLR quota. Okay. Then SLR quota G6 can also be used to obtain money, but at a higher interest rate than repo rate. Understood? This is called marginal standing facility. It was introduced in 2011-12. Okay. Understood? The difference is there is no actual transfer of the G6 between RBI and it is only kept as collateral. If you get a mortgage, the bank employees don't get hold of your house. You live in the house, you use that as a collateral to obtain money. Kind of similar to that. Understood? So all the rates are clear? CRR, SLR, then bank rate, repo, reverse repo, then there is SDF, MSF. What is CRR class? Basis, I'm not asking the full form, just the basic concept. These two are reserve ratios, huh? Part of decided on basis of NDTL of a bank. Okay, these two are the rates at which bank gets money. Okay, reverse repo, RBI gets money. These are extraordinary cases. In SDF, RBI gets money. In MSF, who gets money? Bank gets money. All these rates, except the bank rate, are decided by Monetary Policy Committee based on repo. The declared repo rate, reverse repo is generally 1.25% below repo rate, and on repo rate, SDF is calculated, MSF is calculated. Understood? And CRR or SLR are based on NDTL. To summarize, all we have discussed up till now. Got it? Any issues? You have to remember in which case who gets money, who gets the bonds, and the rates are decided upon which. In CRR SLR, it's based on NDTL. Others are based on repo rate. You don't have any questions till now? হ্যাঁ, এটা তো রেগুলারই চলছে। ওটা তো ফোর্টনাইটলি হয়, 15 দিন 14 দিনের। এগুলো তো ব্যাংকিং সিস্টেমে তো এভাবেই কাজ চলে। আজ পর্যন্ত না পড়লে সেটা দিয়েছে কিনা মার্জিনাল স্ট্যান্ডিং ফ্যাসিলিটি, এটা সবসময় স্ট্যান্ডিং থাকবে। মানে ব্যাংক এগুলো কি হয়, একদিন দুদিনের জন্য দরকার লাগে টাকা, 1 ঘন্টা 2 ঘন্টার জন্য কেউ এমনিতে টাকা দেয় না, কোলাটেরাল দিতে হবে। তো সেই জন্য এগুলো এত কনসেপ্ট গুলো দেওয়া হয়েছে আর কি। ইন ইকোনমিক কনসেপ্ট ট্রাস্টের উপর চলে। ট্রাস্টটা চলে কিসের উপর? হাউ উইল ইউ এস্টাবলিশ ট্রাস্ট? Trust will be based on proof. Now in case of economy, the proofs are government securities or gold or cash. Understood? There is no blind trust based on proof. Okay. Now we have market stabilization scheme. Up till now, we have discussed what are the rates, what are the different rates decided by RBI, and in which process they inject money into the system or absorb money from the system. There are based on NDTLs, based on repo rates, based on inflation systems. We'll discuss later on. Now, there are some schemes through which RBI absorbs money from the system. There is open market. Open market operations. Okay, have you been following current affairs? In one of the statements, he said, I am imposing tariffs on India and China because of unfair what? Tariffs imposed by India or China on US and another. Okay. Now the main thing I am getting, he said, this country is a currency manipulator. What is currency manipulation? The central bank of any country or any government buys or sells its own currency in the open market with respect to foreign exchanges. Okay, so that they can stabilize their own currency. This is called currency manipulation. Now, India is a semi-open market. Okay, Indian government controls the Indian rupee is controlled by Indian government and RBI. They maintain the forex rates by buying or selling dollar or yen or pound, anything. Okay, now this activity is termed as currency manipulator, because in fully open mercantile or not mercantile capitalistic system, the rates should not be decided by any government, or the government should not have any intervention in the currency rates. But India is a developing economy, and our economy is fundamentally different from US economy. US economy has the benefit of reserve currency. India doesn't have that. So to stabilize ourselves against any foreign exchange influx or any undue demand, undue supply of rupee in our system, Indian government has to intervene to protect our imports, to protect our exports. Okay. Now, in fully open capitalistic market, this activity is termed as currency manipulation. So I am just telling you what Trump has said. Now, what is currency manipulation? How it is done? They say it's currency manipulation. We say it's open market operation or market stabilization scheme. We stabilize our market. Now, in what cases this is required? Let, for example, in 2002, there was a huge influx of foreign exchange in Indian economy due to FDI. So there was a lot of dollars in our system. Okay. So what RBI did in 2003 or 4 maybe, I'm not sure about the dates, you will check it later. RBI introduced the open market operation scheme in which RBI bought dollars from the market. So how will RBI buy dollars? RBI will buy dollars from the market, and it will pay. How will RBI pay? Goods. Why? How will RBI supply goods to the market? RBI has rupee. So RBI will pay rupee to someone holding dollar. Now let's say I am holding dollars. I have a, let's say, mobile phone or making factory. So Apple pays me, let's say, 300 million US dollars to manufacture the screens. Okay. Now, as Apple is a foreign company, US based company, it will not have rupees. It will pay us in dollars. Okay. Now there is a huge influx of dollars in the market. So what will happen? Rupee will appreciate. What do you mean by rupee appreciating? The price of rupee going up. Let's say before this influx of dollars, supply of dollar is going, there is huge supply of dollar in the market. So let's say $1 was, before the supply, there was, this was the exchange rate. Now $1 will fetch you only 40 rupees. After supply, because there is huge amount of dollar in the market. So price of dollar going down. Before, to purchase $1, I had to pay 50 rupee. Now as there is increased in amount of dollar in the market, now I can get $1 with 40 rupees only. increasing, rupee is appreciating. Understood now? This was the case when there is FDI or investment in Indian market. Understood? Now, what is the negative in that? India wants to be an export-driven economy. Okay. Now we have Infosys. Or let's say give two examples. There is an anybody know any agricultural supplier? Let's say Kohinoor basmati rice. Okay. Now they are exporting goods from India to, let's say, US market. Okay. Before, Infosys had to got paid in dollars, let's say $100. Same Kohinoor, $50. So before the supply for the same $100 payment, the revenue or income of Infosys was how much? 5,000 rupee. After rupee depreciating, same $100 bill will get 4,000. So there is decrease in income of Infosys, decrease in income of engineers of Infosys. Understood? So this is the harm in open market. So for same here, before it was, now it is. So in the same supply, the farmer used to supply same quantity of rice. Before he got 2,500, now he's going 2,000. So exporters will be harmed in this case. Understood now? So to stop that, RBI has to intervene in these cases. So they buy dollars from the market to limit the supply of dollar and increase the supply of rupee. So let's say again, $1 goes back to 50 rupees. Understood? So these activities are termed as currency manipulation by US. For us, it is market stabilization scheme for our own good. Nothing is done out of whims and fancies of any government. Everything has a logic behind it. Understood? So one scheme is OMO, open market operations, in which RBI buys foreign exchange or buys rupees, whatever is needed according to the case to case basis. RBI decides and buys rupees or dollars or anything they intend. For example, I have given the 2002, there was huge influx of dollar in our system. So RBI bought dollars and stabilized the market. And similar in case of COVID also, they did same thing. So because there was huge outflux of money, dollar from the system, so they did exactly the reverse. They bought rupees so that rupee will be appreciated. Got it? These in case of exports only. In case of imports, this case is beneficial now. For oil, we have to pay less. So RBI has that intricate thing to balance the export and imports, to balance the rates so that exporters are not hurt, importers are also not hurt. Who is the largest importer in India? Government of India is the largest importer. We have to buy fuel, we have to buy defense equipments. So there is a huge export bill, there is a huge fiscal deficit in India. So for that to maintain, RBI has to maintain the policy rates or the exchange rates in such a way that there is growth. There is growth in exports also. There is, and also we don't have to pay extra for the essential imports. Understood? So now this is a government intervention. Basically, in very crude terms, this is a government intervention. For that reason, US has termed us as currency manipulation. It is not unique to India. Every developing country does this. Every country does this to some extent. India does this. Simple. Otherwise, our market will be destroyed now. Everything can be dumped on us. What is the size of our economy? Not even 5 trillion. Chinese economy is 19 trillion. US economy is nearly 30 trillion. So there is some fund managers, let's say Blackstone, out of Blackstone Group, Vanguard Group, those fund houses manages funds worth excess of Indian GDP. So in one, a single company can dump so much bonds in our country that our economy may collapse. So for that, we have to safeguard our investments or our rupee, na. And there is also in open market operations, there is two concepts. There is permanent and repurchase. Same. There is short-term agreements when you have to balance in short time. It is called repo or repurchase. And in permanent, there is in some cases RBI outrightly buys the bonds, buys the dollars, and there is no agreement to repurchase or resell them. These are called permanent. Got it? PEMO. Any issues? তুমি একটু কনফিউজড মনে হইতেছো কোন জায়গাটা? ক্লাস রিভাইজ করতে হইব এটি মেইন কিছু না, তোমার রেশিওগুলো বুঝতে লাগবো কোনটা কমলে কোনটা বাড়বো, কোনটা সিমিলার থাকবো, কোন কোন রেটটা কিসের উপরে বেসড, এগুলো রাখো। ইকোনমিক্স তো অন লাগতো না, জেনারেল একটা আইডিয়া লাগবে যাতে তোমার সিভিল সার্ভিসেস ক্লিয়ার হয়, ঠিক আছে? তো ওই আইডিয়া নিয়ে পড়ো, যার ইন্টারেস্ট আছে হ্যাঁ বেশি ডিপলি পড়বো, এটা কোনো প্রবলেম নেই। সেম এই পেমো রেপো কইলাম, স্টেরিলাইজেশন অপারেশনস সেম, মানে মার্কেটের থেকে এক্সেস লিকুইডিটি বা এটা ফরেন এক্সচেঞ্জেরও হইতে পারে বা সেম কারেন্সিরও হইতে পারে। এবার হচ্ছে মানি সাপ্লাই। একটু রিভাইজ করো, দেখো তোমরা পুরান ক্লাসটা কি আছে। আচ্ছা, তোমার রেপোর 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 মধ্যে একটা জিনিস লেখা লাও। হ্যালো ক্লাস, হ্যাঁ, রেপোর মধ্যে একটা জিনিস লেখা লাও, এটা শর্ট টার্ম 7 ডে 14 ডেজ এর এগ্রিমেন্ট থাকে, আর আরেকটা হইতে পারে যেটার মিনিমাম 5 crore and its multiples. Okay, understood? 5 কোটি 10 কোটি 15 কোটি এমনে 13 কোটি চাইলে দিত না আরবিআই, ঠিক আছে? সেম এমএসএফ এর মধ্যে এই মাল্টিপলটা হইছে আর এমএসএফ এরটা হইছে ওভারনাইট, মানে একদিনের। গট ইট? So basically this is a demo class. Classes are live on Facebook and YouTube also. We target Tripura Civil Services Grade 2 and some parts of UPSC also. So students interested can join us. So now তোমরা একটু রিভাইজ করে ক্লাসটা একটু দেখো কি আছে, আমি নেক্সট এটাইও করি। তাড়াতাড়ি দেখো, 2 মিনিট দিলাম, কোনো ডাউট থাকলে জিগাও। রিপারচেজের ওটা কি দেখা লইবা, রেট গুলো তোমরা এমপিসি কমিটিতে দেখতে লাগবা। এখন মেইনলি একটু হিস্ট্রি টাইপের পার্ট হইতেছে আর কি, এতক্ষণ কোয়ান্টিটেটিভ মানে নাম্বারসের পার্ট হয়েছে, এখন একটু হিস্ট্রি টাইপের। নাও এবার আরবিআই মানি সাপ্লাইয়ের লিগা আমি তোমাদের বলছিলাম এনডিটিএল আসলো, ঠিক আছে? এনডিটিএল হচ্ছে ব্যাংকিং সিস্টেমে কতটুকু মানি আছে, হ্যাঁ, সেভিংস অ্যাকাউন্টে, কারেন্ট অ্যাকাউন্টে, এফডিতে, ওটার মধ্যে কতটুকু অ্যামাউন্ট অফ মানি আছে ওটার উপর ডিপেন্ড করে। এটা ব্যাংক, আমি যে সিআরআর দেখলাম, এসএলআর দেখলাম, রেপো, রিভার্স রেপো, দোজ অল আর ডিপেন্ডেন্ট অন দ্য ব্যাংকস। ওকে, if you have noticed that all those rates are based on banking activities. Now there is a lot of money in the outside circulation, hmm, with people that is not into the banking system or any financial institution. Okay, so now RBI has to consider that money also to develop its policies. Understood? Now for that money to be calculated, we have different money systems. Okay, now remember this is M0. This is also called as the reserved money or the monetary base. It is highly liquid. Means this money can be demanded or transacted at any time. Okay, now what is M0 consisting of? This consists of the money in circulation, that is the pure cash we have our wallets and purses, huh? And deposits with RBI. Banks also deposit money with RBI, and other deposits with RBI, not with bank. Okay, so this basically the currency in circulation, not in any banking system, deposits with RBI, banks cannot lend that money, and other deposits. We have seen there is MSF or SDF, standing deposit facility. Okay, those money are called reserved money or monetary base. Understood? Now M1 is called narrow money. This contains the demand, not demand draft, demand liability, which is current account and savings account. Plus this circulation money. This is called narrow money. Understood? M0 has currency in circulation, which we have in our cash system, and deposits with RBI and other deposits with RBI. Because some other financial institutions also deposit money with RBI rather than only banks. Okay. Now narrow money is this money M0 and savings account, current account, which is also liquid. It is into the system, but it is also liquid. We can withdraw it at any time. Okay. Now what is M2? Now this part you have to remember very cautiously. M2 is M1, this narrow money plus post office savings, not the TD of post office. TD মানে FD, RD, পোস্ট অফিসের মধ্যে তো মানে সেভিংস অ্যাকাউন্টের মধ্যে থাকে, এই সেভিংস অ্যাকাউন্টে পোস্ট অফিসেরটা ক্যালকুলেট করা হয় না, এটার মধ্যে পোস্ট অফিসেরটা ক্যালকুলেট করা হয়। আন্ডারস্টুড? Now M3 is this M1, not M2. M1 plus TD. What is TD? RDFD. Okay, and M3 is also called broad money. And all the policy decisions that RBI takes is based on this M3. Understood? It doesn't include post office savings. It doesn't include post office term deposits. M1, savings account, current account, FD, RD, and currency in circulation. This is M3, this is broad money. Okay. Now what is M4? It is broad money plus पोस्ट ऑफिस में जो सेविंग्स भी है, टर्म डिपॉजिट भी है, एफडी भी है. ठीक है, लेकिन उसमें भी कैश है. इट डजंट इंक्लूड एनएससी. व्हाट इज एनएससी? National Saving Certificates. Why it doesn't include? Post office only acts as an agent for NSC, for us to buy NSC. NSC is actually issued by Government of India. Understood? If we have a fixed deposit in bank, the bank gives a certificate. In case of NSC, it is the Government of India. It is the President of India who gives us sovereign guarantee of our money. So in that case, that money is not considered in M4. Understood? If any of your family members have any post office account, you can check. That is written, it is guaranteed by the President of India. Any FD or anything like that. And one thing, M0 is the most liquid, M4 is the least liquid. Means to move it, we don't have any restrictions. To move M4, we have restrictions. Because for FDs to break, we have to give penalty. Similar kind of thing. Understood? What is M0, M1, M2, M3? Remember, M2 is not written anywhere. Only based on M1, and in M4, it's M3 plus post office. M2 is not considered anywhere. Part of M2 is considered, but as a whole, M2 is not used. Mainly, we have to what we have to remember: M1 is called narrow money, M3 is called broad money, M4 is the least liquid, and broad money is used by RBI for deciding policy rates, and M0 is the pure cash, no time component to it. Understood? National Savings Certificate. Post office only acts as the agent there. Okay, so it is not included in post office deposits. Now, what do you mean by quantitative tools? What are the tools I'm talking about? Tools of RBI. Everything we have discussed till now are through our policies or rates or schemes through which RBI does its job. Now, those jobs are divided into two different things: quantitative, and on the next slide it's qualitative. Now, in quantitative, there is a number component to it. Understood? And quantitative tools are indirect. They apply to all. For example, let's say RBI declares the repo rate. So this repo rate will be same and applied to all banks. It will not be that the repo rate for HDFC is different, repo rate for SBI is different. Repo rate will be same for all. Same as SDF, same as MSF, etc. These are general and indirect, not directed towards any particular institution. Got it? Now next, we have qualitative tools. These are direct. Let's say these are direct tools directed towards any specific institution. For let's say there is some penalty imposed, or there is some advice given. These are also can be on qualitative factors. Then there is LTV, loan to value. Then there is consumer credit control. For one example of consumer credit control, maybe that one or 2 years back, RBI barred HDFC to issue new credit cards for a period of 6 months. There are some mismatches or discrepancies in the records or record keeping. So RBI said you cannot issue new credit cards for a period of 6 months or till you resolve your problem. Then there is LTV. Few months back, Muthoot Finance, another one is Manappuram Finance. No, there is different thing. IIFL Finance. What is the difference between these issue gold loans? Bajaj Finance doesn't issue gold loans. So RBI said that before there was a limit that they can issue. Let's say if I have 1 lakh rupee worth of gold, I can get a loan of 90,000 rupee. RBI said that this system is giving excess money into the system, so we'll decrease it to 80. This is called loan to value. The value of asset which you give or keep as mortgage and the loan you can get. So in that case, RBI directed only these NBFCs, not the banks. Banks could have given 90, but these NBFCs are limited to 80. I'm not remembering the exact number, but this was the case. So these things can be done. Then there is moral suasion also. Let's say RBI say reason that the financial system might not collapse. হেই তো গেছিল আগে একবার আচ্ছা লেটস তো এটা কইলাম যেমন তুমি সাম পারসন ব্যাংকের থেকে কেড়ে লোন নেয় না why would you prefer taking loan from these institutions rather than a bank? Less interest and they give more value. Banks could have given 90%, but they themselves restrict to, let's say, 77% based on the credit history of the consumer. But these were giving to high risk customers. There are chances of default in the system. And in last class, we have understood if there is a default in our credit system, in any credit system, there is default, it has a negative impact on the money creation, on the money supply. So that these chances don't arise, RBI has to keep a tab on every financial institution. So how will RBI put a tab on that? It can give some penalty, give some advice. First, they will give some advice. If the bank or the institution doesn't follow advice, it can give penalty. If there is no penalty and there is false manipulation in the whole sector, then they give such that LTV in NBFCs only. And consumer credit control is direct on HDFC. These things happen. Recently, there is ban on IndusInd Bank also. IndusInd Bank cannot issue new credit cards now for a few period. These things go on. And there are also LAS, loan against securities. Loan and securities also include mortgages. In crude terms, let's say your home is a security for the bank for your home loan. Loan against securities. Now, what are securities? Remember, I said trust based on proof. So securities are proofs. So it can be your home. It can be the shares you hold in Demat. it can be the mutual funds you hold, it can be the gold you hold, it can be the government security you hold, it can be the treasury bill you hold, anything. Now banks give loan on this, on gold easily. For some banks there are reasons for mutual fund and shares also, and some other gives GCX and T-bills. So these are the securities on which banks can give loan. Now RBI, for a period of time, let's say RBI says for this next 10 months you cannot issue loan against mutual funds. RBI can say that. Nirav Modi was LOC, letter of credit. Letter of credit একটু আগে আমি ডিসকাস করছিলাম কোন পার্টে আসলো letter of credit মানির মধ্যে, হ্যাঁ ডিমান্ড লায়াবিলিটির মধ্যে, ডিমান্ড লায়াবিলিটির মধ্যে আসলো লেটার অফ ক্রেডিট। মানে পিএনবি ইস্যু কি করছিল, what had PNB issued? PNB issued, there was no actual transfer of money to Nirav Modi. Okay, Nirav Modi never touched the money, so as to say, but he get a LOC, letter of credit from Punjab National Bank, saying that Nirav Modi, not say PNB will pay this up to this amount for any export or import done by Nirav Modi. In international export and import, you don't physically go and pay your payments. There are LOCs used, there is escrow accounts used for transactions, then there are forex banks. Forex banks, there are two terms I am not able to recall now. I will try. I will update you next class. There are two accounts in which our currency is used in foreign land, and foreign currency is used in our land. There are specific terms for that accounts. I am forgetting that. I will update you in next class. So as to say, so what Nirav Modi did with these LOCs, he purchased something, submitted the LOCs. So now PNB is liable to pay for that amount. In actual case, Nirav Modi had to pay that amount back to LOC, back to PNB, and which he didn't actually pay. So this was the case. Now LOCs has to be issued against proper credit rating systems, proper guarantees, against proper securities, which PNB officials didn't do. Maybe under some pressure or something like that. We all are समझदार है सब. Consumer corner, now rationing, there is limiting the amount of transaction, then there is moral suasion also. Now this is another policy through which RBI ensures that our economy grows in correct way. There is proper division of money, so that not only the rich can give access to easy credit, the vulnerable sector, the necessary, the MSME sector and other people who don't have any proper credit history, proper credit rating, they also get access to credit, so that there is division of wealth, there is prosperity among all. So for that, RBI has devised something called priority sector lending. So these are different sectors in which any bank has to lend, okay, a certain amount of their loans, so that there is proper development in our system, proper development in our economy. Understood? So these are the sectors: agri, MSME, export credit, education, housing, social infra, renewable, and others, self-help groups, women cooperatives, something like that. Now, one important thing which you will have to see here is these sectors denote the focus of our government. the sectors on which government is focusing so that they can grow much easily. The government is focusing on agri, MSME, export, education, housing, social infra, renewable and other. Let's say next day government declares that nuclear energy is also necessary for India. So government banks or any bank, there are different conditions according to the type of bank, has to lend certain part of their loans to nuclear sector. What happens? Then banks will be able to lend easily to the system or mandatorily to the system. Even if the bank is saying education loans are causing them losses, banks still have to lend to education loans, because without education loans, there will be no growth in human capital. Without housing, there will be no growth in. Can you identify? Cement, iron, labor, paint. So in this way, housing and social infra is indirectly helping these sectors. Also, there is a social impact to housing. Understood? Let's see, there are government schemes in which houses are distributed it among the poor people, and those houses are distributed in the names of women only, not the men of the house. Why? To improve the condition of women in vulnerable areas. So government cannot directly go into your house and stop you from doing anything, but they have indirect measures, or let's say subtle measures in which they control our social life also. Understood? So this is a priority sector lending. कहाँ से कहाँ पहुंच गया? There are some different guidelines of priority sector. For, let's say, there are commercial banks, there are different rates or different targets. For foreign banks, there are different targets. So should I give it to them? Give it to you? Just kind of memorizing. I will tell you one or two cases. The rest you will get in your notes. Okay. This is a blank page. Let's say guidelines for commercial banks and foreign banks. Foreign banks more than equal to or more than or equal to 20 branches. Commercial banks of India and foreign banks which hold minimum 20, and it can be more branches in India. There are different PSL targets for this group of banks. Okay. Here the guidelines. মানে PSL guidelines আর কি. Now priority sector lending এ 8টা সেক্টর আসলো যেটা ডিসকাস করছি. হ্যাঁ, এখন now for commercial banks and foreign banks, it is 40%. 40% of two terms which you need to remember. Adjusted net bank credit or of credit equivalent of balance sheet exposure. Okay. What is the difference between adjusted net bank credit and credit equivalent of off balance sheet exposure? Adjusted net bank credit is a normal loan which normally banks keep. Now some banks have a different business strategy. They don't give out loans. They hold their balance sheet. They hold assets. They hold loans in the form of securities. Okay. Now that security balance sheet will be calculated, and that of that 40%, it has to be in PSL, priority sector lending. Okay. Whichever among these, whichever is higher. If off balance sheet exposure is, let's say, 100 and this is 105, so it will be 40% of 105, not 100. Okay. Similarly, there are guidelines. There are different banks which we will discuss in Banking of India. Okay. There are scheduled commercial banks, foreign banks, urban cooperative banks, regional rural banks, local area banks, then state cooperative, state co-op, then there is also multi-state co-op, multi-state cooperative banks. Understood? These different types of banks we will discuss in banking system in India, most probably in next class. Okay. And 40% is of Eto, and of that 40%, 18% in agriculture, 7.5 in micro, and similarly like that. Okay. Then there is also another type of bank. I will give you the notes in letter. 7.5 in micro enterprises. Let's say a small paper mill or maybe a printing business, something like that. And another is the main PSL targets are given to regional rural banks and a small finance bank. Understood? So there is 75% with most focus on agri and social infra. So there are different rates which are declared by RBI. Before exam, your job will be to look through them through internet. Okay, got it? So any other? There are some few more things left in monetary policy which I will discuss in next class, and then banking in India. Understood? This will be our class. That will be our class 3. Now in today's class, go through the notes in a jiffy and tell me if any issues there. Understood? So no issues. Thanks for your kind attention and your time in this esteemed institution. I hope these classes are beneficial to you. Thank you.